Okay, UTC plus 8, that's here. This is at anyone. Okay, so you have to, first of all, for Friday, okay. Let's make it a little bit bold here. Okay, Friday London Open setup here. Okay. So for Friday, first of all, you'll do Friday London Open setup there, and then Friday New York Open setup there, and then Thursday London Open, and then Thursday New York Open. Okay. All right. So we start with the London Open time. First of all, I will mark this one here, starting from here. The London Open time was 3. Okay, your time here. All right. This is London Open. And the overnight session start at 3 a.m. your time, right? So that should be here. All right. So this is London Open. So you have to follow these steps. Okay. The first step is mark the London Open and mark the overnight session start, OSS. Okay. And then you have to mark the Asian close. Asian close is around 1 hour before the London Open. That is 2 here. Okay. So Asian close. Okay, let's make it pretty simple here. And what do I see here when I'm moving into the Asian session? Okay, first of all, I will notice, okay, first of all, and then after marking Asian session, overnight session, and London session, okay, I have to start mark the highs and lows between it, between Asian session and the overnight session. Okay, so this is the highest point here. All right. If you have a difficulty finding this one, you can use a swing point indicator, which I told you. You know it, right?
Yep.
Okay. Let's change it to the bars, HLC bars. Marking the high here. Okay, extending the line all the way to the London session, exceeding London session. Okay. And then we will also just mark the line here, the lowest point, which is this, probably this one here. Okay. And then extending it to this one here. All right. Now, you have to look. Now you have to see how the price enters overnight session. Okay. Once you have marked the overnight session start, Asian close, and London Open, and you have marked the overnight high and overnight low, the second step would be to mark. You can go step by step, and then you will be able to clarify with things. Okay, your things will be clarified to you. Center. Overnight low. Center. Okay. So now, once we have marked it, we have to see how the prices are going here, right? Extending it all the way down up here. Just extend it as far as you can. All right. Till the Asian. Okay. How far should we extend? We should extend it until the Asian Open. We have 2 Asian Open, right? Or New York Open. Now the point is how far we should extend these horizontal lines. This one and this one, right? Okay, you should extend it until the Asian Open. Oh, sorry, New York Open. The New York Open at 2 times. Number one, at the first time is, okay, the Asian Open here. Your time is how much? 8 o'clock?
Yeah.
Right? Okay. Asian Open. Oh, sorry, New York Open. And that's 8 o'clock. Okay. All right. So here we have adjusting it a little bit here. Adjusting a little bit here. Now we have perfect alignment here. Okay. All right. So once we have marked this both, oh, sorry. All right. Once we have marked this both here, now we have to, now after extending the lines, we have to determine how the price is entering into the overnight session range. Okay. What the price is doing. So you go back here the pre one, what I see that it's a pretty much uptrend here. So I try to draw the trend line first. Okay, this is the bottom first. Okay, the lowest low, the first highest low is this one and this one. So obviously, if I draw the channel here, okay, I can see that the price just, oh sorry, here. So what I see here, the price just breached above it, rejected it, and then this never turned into a, what to say? This never turned into an overbought. It failed and then it went right up, right? So I will remove this line, okay? And I will join from the second point, joining this one and the next one here. Okay, got it? And then what do I see here? The price just went drifted up, okay? And the price entered the ocean session range. No significant thing had happened here, okay? All right, but I see that, okay, the price is just moving here. Got it? Hello, are you there? Hello, are you there?
Okay.
So this is how you're gonna adjust the trend lines.
Yeah.
Okay, this is how you're gonna adjust the trend lines. If the first one did not work out, you have to extend it and see what the next one is doing. All right. And what we are trying to make it as a structure here. And what do I see here? We see a pretty high volume over here, pretty high volume over here. Okay. So obviously, if I join these lines here, okay, I have got some sort of SOT here. Can you see? Rounding SOT. Right? Right?
Yeah.
Okay, we have got SOT here. It's very clear. How do we know whether it's SOT or not? It's very clear. You can see from here. Okay, now you compare this one, swing high, this one swing high, this one swing high. You see the price is making less and less progress to the upside. So once you see the high volume, once you see, how do we know whether we have to check for the high SOT or not? Once you see the high volume over here, the first thing, if it's not overbought, you have to see if it's SOT or not. Yes, it's pretty clear that we have SOT here. See, we have a less progress here, and then we have a less and less progress here. Starting from here, major distance here, all right? Distance big. And as we go up, the distance becoming small and small, right? Understand? So obviously, if you have an SOT over here, what is the third touch? What is the third touch point? Can you tell me? This one? You draw the line over here, all right? You draw the line from here, all right? Okay. And now what do I see here? The price breached this level. Okay, breached this level and very exited rate and then reversed. Got it? What does it show you? This high volume occurred right after this point, after we see the price is declining. As the price goes up, you see, and the price is declining. Understand? You see? As the price goes up here, the price is declining. Got it? Can you see?
Yeah.
Okay, this kinds of SOT, okay, it means that the buyers are becoming less and less, right? Aggressive. And now all I need to do, if the structure, if you have not found SOT can be clearly found here, and that's why we can say that this is an SOT, okay? And the second thing, SOT, okay, if you go to the 5-minute time frame, you will be able to find SOT somewhere around here as well, okay? So once you draw the chart, I suggest you to filter through the 5 minutes as well. Now you see, I have to adjust the lines here. Okay. Now this is a 5-minute chart. Okay. You see very high volume on top, very high volume on top, right? And then it happens after what? After we see this one, these two SOT line, if we draw it, although we do not get the third touch point here, but you see that the volume is declining here, right? And then suddenly, what do we see? The price went up, the overnight session started. Okay, we are in this trend channel. All right, we have a sudden accelerated move to the upside. Can you see?
Yeah.
This is how we read volume. You have to look for the volume. Look the volume. Okay, now compare this volume, okay, towards these last few bars. It's very huge volume. Am I right? Okay, you have to compare this volume with the last peak, which is this. If this is the last peak is here, then last peak is here. You see, it is greater than all last peaks. Do you understand? This is what catches my attention. Understand? And where it is right over here. Where? All right. It is right over overnight session start. Can you see?
Yep.
All right. What does it tell you? This is what buying climax. Understand? As I told you that buying climax can be of three kinds. Number one, when you have SOT. There was little SOT forming here. Two, we have two touches, but we did not get the third touch. Right? So we cannot say that it's a proper SOT. Understand? Right or wrong?
Yeah, correct.
Okay. Why do I look at it? Why do I notice that there should be an SOT here? What gave me a hint that there should be an SOT? Because of these high volumes over here. All right. It gave me a hint that there might be an SOT. If there is no oversold now overbought, then let's check for SOT. So I got one touch, second touch, and if you draw the line extended, there is no third touch. These lines are already extended here, no third touch. Okay. So obviously this is not SOT. The SOT is failed here because if you compare from here to here, okay, all right, the distance reduced, and from here to here, the distance increased, right? So SOT fails here. But if the SOT fails here, no problem. We have not got SOT. We have not got, we have just got a little bit clue about SOT, but there was no clear SOT. There is no buy oversold. Okay. Sorry, overbought. And what do we have now here? But we have a high volume at the top, increasing spread, sudden acceleration to the top. We call it as a climatic move, right?
Yeah.
This is a panic buying. Remember, a panic buying climax. Once increasing spread, high volume. We call it as a buying climax. All right. And see the location where it is entering, where this occurs. Can you see the location here? The location at overnight session start, high, overnight high. Okay. And then now, what happened? If this is buying climax here, okay. Now, what usually you do, I want to see that how the price is going towards this overnight low. We have little bit kind of distribution here, a very little bit kind of, what do I have here? If this is buying climax here, okay. If this is buying climax here, the first reactionary pullback was here, right?
Yeah.
Very small range, okay. If this is buying climax, this should be what? AR.
Yeah.
All right, this should be what? Secondary test. And secondary test has some sort of, no, there's just a secondary test. All right, there's a secondary test here. We have considerable volume, increased spread, but see where the bar is closing. It's in the middle, right? And if you go to the 3-minute, 5-minute time frame, you will notice much more refinery. If I want to see if this is successful secondary test, if you see any kind of conditions here, let's see. What do I see here? You see here, the price made a lower high, huge volume. And after that, what do I see here on a 5-minute time frame? Effortlessly no result. The price went down, right? Okay. All right. But we are not taking the trade here. Okay. If we had to take here, we could easily take the trade here, right? All right.
Yeah.
But you know, this second high, and then after this high, okay, the third major high was this one here. And then we can just go for the test here or test here and then go for the short trade until the overnight low. But we are not trading within the overnight range. So we have to avoid this. Understand? Everything is making sense now?
Yeah. All right.
Okay. All right. So we have a buying climax, secondary test, and this all. And then this is a feature of what? We have lower high. Okay. Secondary test. ST, which one? Lower high. Okay. And then about this one, what? The price breakdown. Okay, we have different kind of what? What is this kind of this one? What is this part here? This range here? A kind of redistribution process and the price went down, right?
Yeah.
Okay, and then this is what? FTI. Now you might say, oh, this is an FTI, falling through ice. Okay, so here the buyer should be short. Okay, right over here, the buyer should be short. right? It was short here. Definitely it was short here. You see the price reacted, but this 15-minute time frame, if you go to the 3-minute time frame, you might see that it was the price did follow through the bias. See here, the price did follow through the bias here. Following through ice, tested here, but what do we see here? Selling climax on the top, right? Wait, hold on. Hello, yeah, are you there?
Yeah.
Okay, now did you see here? What I'm trying to say here that, okay, they said if you go to the 15-minute time frame here, you might say, oh, this is what? FTI. Yes, this was FTI. And when the price reacted to it, it did work, right? It did work. Here it might not seem to be a very good move, but on a 3-minute time frame, it was a very good move, right? To the downside. Correct?
Yeah. Yes.
And you see there's a very huge volume and then rejected. You see where the price is closing. And then after that, what are you seeing here? Now, if you go on a time frame, you know that we can draw the structure here. Okay, if this was the first higher low was here, right? So just drawing the structure, very narrow one, very narrow structure. See if we can define it with the 5-minute time frame. Okay. Yes. Yeah. We can define a 5-minute time frame, and then we huge move down, climatic move, and then rebound. Right? Can you see?
Yeah.
And then what happened? The price entered the range, cleared it, and then this becomes what? JAC. Understand? So what do I notice here? What do I notice at the top here? That at here, what do we have? Bearish bias. Okay. The bearish bias on the top. And how about this one? The price reversed here. And Asian Open, what do we see? The price reversed here. All right. The price reversed here. And all right. See, then what we have? Oversold. Okay. Oversold, lower high, right? Higher low, secondary test. And the price drifted up, JAC. So what do you have here? Tell me.
Bullish
Oversold.
bias.
Okay. Plus selling climax, right? And then we have the price entered the range here. Okay. And if you want to see, okay, sometimes, okay, you see whether we can join. But if I go on a 5-minute time frame, I tell you one thing here. Always refine the structure with a 5-minute time frame, because you have a couple of time to refine your structure. Okay. So you see here, little bit lower. If you see, this does not reach the highest point, right? Right over here. It was a little bit lower over here. Can you see? So actually, we
Yeah.
can extend this line all the way to the upside, to this side. Now you see this channel would make much more sense now, because this was the first lower high. Now you draw it. Clear now? Clear now?
Yeah.
Okay. So this becomes, because if you go on a 5-minute time frame, so when you are marking the channel, for example, and everything you're doing the structure, I first of all go on the advice is to go on a 15-minute time frame, do it, and then refine it with the 5-minute time frame. See if you can find some, like if you can fine tune your channels and structure. You see here I detected it was a lower high, and if I join these two, I can see that it was easily selling climax, much more better than this channel, right? Okay, and then this would be what? AR. Okay, this would be what? The first, we did not get it here. First lower high, right? Here, the first higher low. Higher low. Okay. And of course, after the first higher low, this entire higher low, the price went up. This is what? Spring, right? All on a 5-minute time frame, correct?
Yeah.
Okay. Spring, after spring, I suggest you to mark the channels on the 5-minute time frame. These markings. Okay, this will give you a clear view. First of all, draw the major structure on the 15-minute time frame, and then mark this Wyckoff symmetrics on the smaller time frame. Now I have to remove this all because I don't want these things to clutter around here. What I know here, okay, that this around here, okay, this around here, this spring, after spring, this is a bearish bias, so I don't have to put anything. And here, what do I see here? After spring, the price extended the channel, breaks through it, and where is our market open? Breaks through it here, right? So this becomes what? JAC, jump across the creek, right?
Yeah.
Right after jump across the creek, we can extend the line further. And what do we see? The price is directly reacting to this line here, right? And then reversed here before London open. Okay. So this becomes what? This becomes what?
Okay. Yes.
Yeah. This is
Okay.
AR, right? This is AR. You can extend it further. But we have to see the impact on this one. So this AR had a very little reaction. All right. There was a news, but we only enter at the London Open. All right. So what do we see here? The price reacted up, right? London was opened here. So this becomes what? This price reacted to this line. This becomes what? Last point of support,
Yes.
right? Okay, very clear from the structure. After LPS, the price is driving up, and the London opens right over here, obviously. Okay, and after LPS, if you take this whole structure here, do you see anything common here? If you can see, you can draw the little structure here. All right, with the LPS line, because the price is reacting to the LPS, and it feels like it's moving in waves, right? And then of course we have increased volume as we broke through it, right? See the volume. See, the volume is guiding you. So this is secondary JAC, another JAC. So obviously, when the London open around here, what do I see here? That this range here, where we have a high here, this becomes a part of what? Now see a 3-minute time frame. Redistribution. Am I right? Now we are following the same route here. We have not, until we reach this point here, then we will say that we can get the bearish bias. But for now, it's only bullish bias. All right. So we see we have a range here, JAC here. The second JAC, you can see the volumes. Okay, you can see the volume. Volume is increasing, spread is increasing. We are breaking this channel, right? We are breaking this channel. Okay, between this and this here. Okay, and I notice one more thing here. If I just draw it, I form some kind of SOT here as well. But of course, FE, as we observe, this is LPS, this is JAC, and this is SOT. Everything's very clear, right? So here the tip is, once you are entering near the London session, okay, go for the 5-minute time frame. See, first of all, this is known as the macro structure, macro. the bigger structure. This is known as a microstructure, which you draw on the 5-minute time frame just before. This is for the immediate bias. Okay, because we have the bias here, which is bullish, here bearish. Okay, and then the immediate bias here is bullish, falling through this one because the price is already moving up. All right, so the price will remain bullish until we go towards this overnight high. Got it? Now the entry point here, the price made here. All right, can you see here? London Open. After London Open, what do we see here? Hidden spring. Okay, key reversal, hidden spring, good volume, right on the top here. Place your trade, and then this would be your first trade. Got it?
Yeah.
Okay, this would be your first trade. Right after London Open, what do we see? Hidden spring. Okay, your entry mostly comes right after London Open. You have to see, okay? And I see that this is the London Open, okay? And I see that this is what? No supply. After no supply, the price is rising, okay? And you might say, oh, this is a bearish. This is not a bearish outlook. We are in a redistribution phase, all right? This is a very hard to take because there is no, I mean, I cannot find any kind of pattern here, like sign of strength or sign of weakness, entry point, okay? Here, I got the entry point here, reflecting from here. When it forms the hidden spring and then it closes up, I can enter. Got it? And now the price came back. Okay. The price came back here. And then what kind of, can I see? The price is increasing. Yes, JAC, but I have little bit kind of what? Effort versus no result here, right? Can see the volume here. So there will be a small kind of distribution here, very small kind of distribution. And the price did, but we don't have to take the trade in this manner, right? So the price came back here, all right, and reacted to this level here as well. After JAC, okay, this is JAC, this is redistribution, again JAC, microstructure of what? Redistribution, very small redistribution. Oh, sorry, very small distribution. And the price came back here, tested this region again. What do we get? Okay, if you miss this opportunity, we have this one here, but it's very hard to enter over here, right? Okay, it's okay, you can enter here as well. And then we have this entry point as well. Can you see? We have 3 entry points here. Hidden spring, key reversal, you can see. Another key reversal. Okay, good volume here as well. And then no supply. Can you see?
Yeah.
We are testing which line? This region. Now tell me, why would you not enter over here? This. Mostly people, they mostly like you, they will just enter over here, put their stop loss right over here, and then enter over here, and then get the hit. Why? Why I would not enter over here?
The volumes are all equal.
Okay, I am tempted here when I'm seeing the move to the upside, JAC. Okay, the JAC should have a clear move. Remember that. Okay, the JAC should have a clear move like this, or bar closing on the top, near the top or on the top. Okay, and a good increase in volume. That's okay and fine. This is JAC. But how about this one? The volume is increasing here, but see the last one here. It's efforts and see how the bar is closing. Can you see here?
Yeah.
This changes the whole game. It means, yes, this is JAC. I'm not saying this is not JAC, but there is a little bit distribution over here at the top. And if you just extend the line here from this here, this was an upthrust, a minor kind of upthrust, right? And the price reacted to it and then it fell down. But we are against the bias. We only have to do, so we will not take the trade right over here because of this situation. And as I told you, after JAC, if this you consider as JAC as well, increasing volume, increasing spread, yes. Okay. After JAC, what happens? The price is in what form? Redistribution, right? And you could enter over here. The point is why you did not enter over here. Can you tell me the reason? That's what I'm asking.
Mm, no, I'm not sure.
Okay. First of all, I am very near this one, right? Okay. If I just take this trade, forming it and say, okay, this is a good trade here. So even if you enter the trade here, sometimes, okay, when you take this trade here, okay, you can enter over here, right? You can enter. There is, but I would not enter because at the top, what do I see here? As I told you, but not many people will notice it. This one here. Okay, you have to look for the bigger picture. That's very important. All right, this one over here. Whenever you see the no high volume on the chart, mark it. Okay, the rule is whenever you see the high volume on the chart, mark it. Where did I see the higher volume here? Okay, I see the higher volume on this chart here and this bar. Okay, got it? You see higher volume, this bar, higher volume, this bar, higher volume, this bar, higher volume, this bar. Mark it. Okay, here, higher volume, this bar. Got it? Higher volume here. Got it? Mark it. Higher volume, this bar. Higher volume, this bar. You see how the price is reacting. Sometimes the price reaction will be small. When the price is not reaching any reference line, it will be small. Okay. All right. So we have this entry point. We have this entry point. We can enter and write exit over here. Do you understand? Now, if I have to mark the, can you mark the triangle? If you, even if you mark it, it will not make any. And then the second thing I noticed here is, yes, there could be SOT, but there is no SOT. Nothing. It's nothing clear. But yes, this one here, very high volume. Can you see very high volume? This should mark your attention and see how the price bar is closing. So what does it? This is very high volume. This should mark your attention. Very high volume. This will mark your attention. Got it?
Okay.
Okay. So this one, obviously, you cannot take your trade right after here. Okay. So the ideal point would be to wait for the price to retrace back to this range and then go back above. Okay. Now we are doing your first major trade would be here. This is your first major trade. Okay. The first major trade right after here. All right. And then once you are just entering right over here, okay, then this is your second major trade. Okay. All right. So obviously the bias is to the upside. And now we have reached this area. Okay. Overnight high. Okay. Overnight high. Would you reverse it? Do you think there's a possible trade around here?
No, don't have.
We have bearish, right? Okay, when we have a bearish outlook here, okay, let's go to the 15-minute time frame here and see if we can set any kind of structure here. Okay, if we just draw from here to here, this part, and if we draw here to here, this part. Okay, just before London Open, I can draw this structure. Am I right? Okay, and now you can see things will make sense. Do you think I should enter right over here near this trend line? Right? It makes sense? No, I should not. And now the price becomes overbought right over here. The price went up. It becomes overbought of this channel, right? But as I told you, I should see a very huge volume to the upside to make sure that things become overs. All right. Okay. All right. So if this is And I should observe very high volume as well. Okay, sudden acceleration. This is very normal acceleration here. Sudden acceleration, the price returned back to the trading range. Okay, all right. And we have very huge volume to the upside. This becomes what? Buying climax. Or, okay, oversold. Sorry, overbought. And now we have a clear bias. We have a bearish bias from the upside. Do we have the bearish bias to the upside? We know already. All right. And now we also have the channel here. Okay. And now we can also draw the structure like this. Okay. We can also draw. So if you are not drawing the structure, fine, not a major structure, but as the price clears this one, okay, and you can easily draw the structure like this. Now this can't be overbought. Why this can't be overbought? This one here. Okay. Now if you draw the structure like this, you can see easily where the overbought should exit. Okay. All right. So where if I take this trade here, all right, just like this, the reward to risk ratio is very less, right?
Yep.
Right. So possibly I will not take this trade. So you should know when to avoid taking these kind of trades. Now you see SOT, you will not directly take the trade on SOT, right? You will draw the line over here and see the rejection of this point. Okay. Now, obviously, this was caused by this news. Obviously, this was actually going down, but we had a major news right over here. You can see Bank of England news, which turned the market. Otherwise, it would have worked in our favor, right? All right. So the entry points. Yes, your trade can go wrong, but what happens? But you are very right on the trade, but it goes wrong, and the second time it goes right. What to do in such sense? Okay. Now, just take the trade. Okay, and mark down your. Okay, mark down your, let's suppose 2R right over here. And as you move 1R in your favor, 1R in your favor, what I suggest you, move your stop loss to break even. Okay. You know how to move your stop loss to break even? Hello.
Yeah.
Do you know how to move your stop loss to break even?
No.
Okay. Just put on a trade, for example. Okay. I will explain you obviously tomorrow in the live market. Okay. How to move your, but the point is, once the price moves 1 hour in your favor, just move your stop loss to the break even and then just deal with it. Okay. This will help you to avoid, you know, these unnecessary trades. But the major structure from here, because this is an overnight high, okay, and the price is just rejecting the overnight high. Okay, why? No, but there is some kind of structure, but I need the immediate bias as well, right? Because it's too long, right? I need some structure. So I draw the structure from here to here, and I see that this becomes overbought buying time. This is actual trade, and you see sudden acceleration to the upside, and the price react to it. Right over here, very clear trade after overbought. Okay. And then the price followed the whole bias to the downside. Okay, I have to start this again. Okay.